Hello, I'm Jesse Kelly from Chesterfield County Public Library. And I've got today with us Trevor Batt. He's from Cardinal Financial Planning. And Trevor's going to tell us a little bit about how to save during a pandemic, what should we be doing with our finances during this pandemic, and basically how to survive this pandemic as far as our finances are concerned. So Trevor, welcome.
Thank you, Jesse.
Glad to have you here. Very curious to hear what kind of information you have for us. So let's start off, Trevor, just by giving us a general overview of what services you provide and what should we be thinking about as far as finances during this time.
Sure. Well, thank you, Jesse, and thank you to the Chesterfield Public Library System for having me here. It's a great opportunity to talk about these important topics during this challenging environment that we're in. Obviously, there's seemingly challenges at every front, whether it's figuring out how to stay healthy, figuring out how to juggle finances, or figuring out how to wear a mask without fogging up your glasses, which is always something I have trouble with. You may as well.
Indeed.
So one of the things I've just been reflecting on and kind of thinking about myself as we're in this time period where we have circumstances that can be challenging from a financial perspective is kind of flipping that on its ear and kind of thinking about, well, how can I take this time, which is unique, and there are often struggles when it comes to income, having enough income, or knowing how to spend the income we have,
right.
How to kind of taking that and using that as reflecting on that and using this challenging time as an opportunity for growth way into the future. Because of course we know with where we are right now in this pandemic, we know it won't last forever, but some of the habits that we can potentially build and improve on right now, financially in particular, can help us for the rest of our lives much further down the road. And to just kind of use this, use all the things about this time, whether it's being able to get outside and get more exercise, or spending more time with families, or whatever. People have been looking at the bright side of things. Personally, that's what I try to do, and I feel like from a financial perspective, that can really be helpful as well.
Absolutely. So what are some of these good habits that we can build during this time to help us improve, and then when this is over, be more financially fit?
Sure, that's a great question. And one of the things that I've always tried to talk about, whether I'm here at the library doing a presentation, I know the presentation we have posted here about specifically pandemic type finances, how to manage your finances during this period of time, kind of alluded to it, but really taking the opportunity to look at your budget, what you have, and I like to break it down into two kind of categories: what you have coming in and what you have coming out. That's what you have going out. So your your income and your expenses. So kind of really looking closely, taking a deep dive, taking a real close look at that area of your finance. And then also on the flip side, looking at your assets and your liabilities. So those are kind of business type terms, but really what you own and what you owe. So looking closely at those two particular areas can kind of help you determine where you're at this, not only at this point in time, but at any point in the future. And of course, doing a regular review on every 6 months, every 3 months, every year at the absolute latest to do a review, can really be helpful if you're thinking about, tuning up, staying on top of these things, and again, making some improvements, using this as an opportunity to learn and grow and kind of understand where you're at so you can get to where you want to be. And really, so the other side of that, in addition to what you have coming in and going out, what you own and what you owe, it's kind of thinking about your goals then. So determining, how are you going to use those assets, those resources that you have to achieve whatever goals that you and your family have is, really important. So that's kind of a key thing.
And I imagine those goals, like you say, are different for different people. So how do you go about helping people figure out what their goal should be and what their goal is, or because it's such a personal thing to figure out what is your financial goal?
Sure. Well, it really ends up being centered around whatever is important to you and your family. And of course, as you mentioned, Jesse, I mean, it's totally individualized for every person, for every family, and for whatever stage of life they're at. But the most important part of that process, I personally believe, and I've seen this in my own life, is to do what a lot of folks do at work when it comes to goal setting. You may have, here at the library, you may have a supervisor, you may have an annual review where you write your goals down, and now how did you perform compared to those goals may end up driving a raise or a promotion down the road. So really documenting the things that you want to do is probably the best way to, being able to keep yourself accountable to those goals, and then taking the next step of figuring out how are we going to allocate assets to those goals. But unless you write them down, monitor them, go back and check in, amend, update, delete, add. That's really, I think, the best way that you can actually turn those goals into a reality.
So you're talking about, maybe like in your presentation, you talked about marking these goals and documenting. So making sort of a financial journal?
Sure, absolutely. Really everybody has their own preferences when it comes to how they want to manage finances. So some people really like to use a more, let's say, sophisticated system, whether it be a Quicken, like a software product. There's a lot of great apps that are available for phones that can be easy to access. So to use those tools and resources if you feel comfortable doing so. But I think ultimately it's important to recognize that at the end of the day, all you need is a piece of paper.
Right.
And so you don't have to use a system. You don't have to pay for software. Even if it's a free app, you don't have to worry about messing with typing, using your fingers
Right.
there, typing in
That's right.
numbers of words into the little app and so forth. But at the end of the day, it's really all about documenting, writing it down somewhere, keeping yourself accountable, and then going back for a continual update and review of that of those goals and how you're performing with achieving.
Absolutely. So let's talk a little bit about consumer debt. And at this time, we have a lot of people who are out of work and they're afraid to take on debt. I know in your presentation you talk about that taking on some debt right now may be necessary. Can you talk to people about, and just let them know that maybe it's okay to take on some consumer debt and what that's like?
Sure. And one of the things I always talk about when I'm having an introductory conversation, whether it's in a group setting here at the library or with individuals, one of the things I always like to say is, hey, we're entering no shame, no blame zone, right? So, everyone has unique situations that happen, whether it's in the past or maybe it's even happening right now. Of course, we're in a unique environment right now. So unique times, certainly means that we have to do unique things to keep ourselves fed and clothed and a roof over our head. So there are certainly some times when taking on more consumer debt is an unfortunate necessity. And so there are some ways that we can do that intelligently. And we'll talk a little bit about that, in the presentation. But I would say overall, as funds are coming in, whether it's potentially through government stimulus money that has come or maybe will come in the future, or unemployment benefits, I think one of the most important things you can do to potentially minimize that, let's call it expensive debt, right? Because that's what it is. At the end of the day, if it's credit card debt, it's going to have a high interest rate associated with it. So taking on as little as possible, and also ensuring that you're making at least minimum payments can help maintain your credit score during this particular period of time, because it can take quite a while to repair credit if it becomes damaged because of total non-payment, not even making minimum payments. But the good thing right now, and one of the things we've seen, and I alluded to it in the presentation, but companies in general are being very flexible right now. So I would certainly encourage anyone who's in the situation where they have a challenge, a loss of income, to make sure you're reaching out. Make sure you're reaching out to the companies that you have accounts with. And if you need assistance, a lot of companies are offering it, and that's really great. So definitely know what's available, and take advantage of it where necessary.
Absolutely. And I want to say to any of our viewers, if you have a question, please write in, let us know. Trevor's here to answer your questions.
We do have one question. What advice do you have for managing uncertainty?
That's a good question. That's a very
Sure. So uncertainty from a financial perspective is certainly, I think, the best way in the here and now, in the current environment that we're in, to manage financial uncertainty is to ensure that, to the extent you can, try to build up that emergency fund. There's some benchmarks that are out there, and you can certainly find them online. But I think in general, folks that are in the financial advice business will talk about 3 to 6 months. And when we talk about 3 to 6 months, it's definitely 3 to 6 months of non-discretionary expenses. So if you think about all the expenses you have, certainly not all of them are expenses that are mandatory, like food and shelter and clothing and those kind of things. So for the mandatory expenses, you certainly want to look at those in total, what they are on a monthly basis, and then if possible, try to put aside anywhere, again, from 3 to 6 months. Now, some folks that have very stable employment, you maybe need a little bit less on the lower end in terms of number of months, or on the flip side, if you happen to be on 100% commission or a sales job or something along those lines, that would be a situation where you'd certainly want to have more. Obviously, larger expenses, larger non-discretionary expenses would indicate that you have a larger fund just in terms of absolute dollars. So for the stimulus money that's coming in, for the extra unemployment money that the federal government is providing on top of the state unemployment right now, if you do have any extra from those resources that are being made available, to put some of that aside, even if you can't put all of it aside, put some of it aside, that can kind of help slowly grow that. Because, the reality is, we were talking about this earlier, Jesse, I mean, we don't know how long this is going to last, right? This whole pandemic situation. We've seen in other states that they're closing businesses that had previously been open. And so that means, from a practical perspective, that people may be going back on unemployment. And with the $600 a week that is being provided from the federal government about to end, with potentially there being more unemployment, again, maybe in other states, but potentially here, we don't know. It's really important. That's a great way, having that, knowing that you have those funds for non-discretionary expenses can be a way to reduce uncertainty and reduce anxiety as we go forward with no matter what the course of this particular pandemic takes.
That's excellent. Thank you for the question. It's a very good question.
Good question. Yeah.
So I'm curious here, we're talking briefly about federal government and money that, we did have a stimulus check was issued here earlier. If another stimulus check is issued, can you give us some advice about what a person should do with that money, with that $1,200 or whatever the price may be, in order to make sure they're getting the best value or benefit out of that money? And I know, again, this is a very personal issue in that everyone will have their own agenda and they'll have their own way they want to spend the money. But can you give us a general idea of how that money should be spent?
Sure. I'd say, first off, we talked about an emergency fund, right? So if there's any extra dollars, I would say emergency fund up to that 3 to 6 month level, whatever your normal emergency fund would be a great idea to kind of give some stability and certainty no matter what happens. The second thing would be to pay down debt if you have it. A lot of folks do. And so when we think of debt, or any sort of debt, we can kind of break it into two categories. Debt on assets that increase in value and debt on assets that decrease in value. And unfortunately, most of what we have in society, I guess overall here in the United States, is debt on things that decrease in value. So, there's certainly plenty of mortgage debt that's out there, which is generally an appreciating asset. Even student loans certainly would fall into the good debt category based on the fact that they can help increase your earnings and your overall wealth for the long term. So that's kind of the thought of as the good debt. But if you have any of that higher interest consumer type debt on depreciating assets, decreasing your, and I think I use this term in the video, but your financial leverage, your overall debt load is a great idea. We would certainly love it if the federal government did that as well, right? Because they keep increasing the amount of debt that they have, that we are all going to have to deal with, and our children and so forth are going to have to deal with going forward. So future generations. So those are two kind of obvious things. I think going from there, you could make the case that you could pay off other more productive debt, or if you have extra funds, think about giving it away, helping out people that may be in need.
Yeah.
It's always something that is great to do if you have the ability to do so. Some great organizations here in Chesterfield County, whether it's faith-based organizations or food banks and so forth. Plenty of opportunities to help out people that are in need. And then beyond that, hey, let's support local Chesterfield businesses, right?
Absolutely.
So when we think of spending, certainly those local businesses that could be having some significant challenges themselves from a cash flow perspective, helping out local businesses.
Absolutely. I'm curious, we have a lot of viewers who are college-age students, and I know that some student loans that are backed by the federal government were suspended, meaning you don't have to make a payment to your student loan. Should a person take advantage of that, or should they try to go ahead and keep making that payment even though it's not absolutely necessary?
Well, I would say if you have the ability and you have the funds, again, you've got you've got your emergency fund, whatever size it needs to be. And again, whether you're young or older, whether you're retired or a recent graduate, having an emergency fund is really important. So that doesn't discriminate age-wise. Everybody needs to eat, right? Everybody needs to have shelter and food and those kind of things. So having an emergency fund, whatever size, is relevant for someone or a family of any age. But if you have the ability to continue to pay bills, I mean, and certainly in general, you would want to do so. I know there's been some programs out there that have been released, that have been put out for released to help people with mortgage payments.
Right.
Now, if you need mortgage assistance, by all means. But I think what we found out as time has gone by here, even just a couple of months, some of those programs, when you read the fine print, they look a little less generous than they appeared maybe on the surface. So to that extent, I think always the best case would be to continue to pay. But if you think you might have a financial liability coming in the near future, and you want to build up some cash, and the government, in this case, you're talking about student loans, are kind of giving that the opportunity to take a pause, then by all means, I think that's a reasonable thing to do.
Take advantage of that. Sure. That's interesting. Well, we talked a lot about physical fitness or financial fitness, and I'm wondering, what do you expect as far as people's consumer spending or saving? What do you think is going to change after this pandemic? Do you think people are going to be less likely to spend their money, more likely to save their money? What do you expect out of financial behavior after this pandemic?
Well, I think one thing's been really clear with what we've seen already. And matter of fact, you can look at the stock market and see this, right? Because there's a certain section of the stock market, the tech stocks in particular, have done really well. I mean, my goodness, they're up double digits on the year, whereas the stock market as a whole, at its lows earlier this year, was down 37%. So not only have we had a huge swing, we've also seen a lot of resiliency from those companies that frankly have not been impacted at all, and if anything, have been making more money with people being at home. And so this whole recession that we've seen has really been, of course, unlike anything we've seen before, certainly in all of our lifetimes. And so it's had some different effects that you would have seen in the past. So for example, movie theaters, which would be normally thought of as a recession-proof business, some are in the brink of bankruptcy. bike shops couldn't possibly be doing any better right now.
Right, yeah.
I'm on a 40-day wait for my daughter's bike.
Yeah.
Because the bike shops locally have just been cleaned out. So it's really odd and unique to see how some businesses have really thrived and other businesses understandably have faltered. So when you look at the hardest hit sectors in the market right now, in the economy overall, of course, it's the usual suspects, right? It's hospitality, it's travel, it's any of these high touch customer facing businesses. Even restaurants certainly are not by any means back to full strength. And so ultimately it's going to be, whatever we see going forward is going to be driven by the fear or the reality, as it may be, of getting infected, having a situation where you're putting yourself or your family in an environment where it would be more likely than not to potentially be exposed to the virus.
Absolutely.
So to the extent that we're able to minimize that either through a treatment or ultimately a vaccine, I think we'll see all of those most affected industries rebound. But for the short term, it's really going to continue to be those businesses that allow us to keep our distance from everyone else, whether that be online shopping or any of the other more recession-proof, I guess you could think of groceries, consumer staples. I know the home improvement type places have been very busy. Yeah, Home Depot and Lowe's, right? So places like that will continue to do well. So we'll have to see, but ultimately I think it'll depend on the course of the virus and if treatments or vaccine, when it becomes available, and then the individual area that we're in. Again, fortunately in Central Virginia here, we're doing fairly well with our numbers, but we'll have to see as we go.
Yes. Excellent.
We have a question from the comments. Is now still a good time to refinance your mortgage?
It's a good question.
Absolutely. So right now we're continuing to see really low interest rates. Matter of fact, interest rates have been low for what seems like years. And actually, if you look back at a chart of the 10-year Treasury so I was born in the late 70s, the early 80s interest rates peaked somewhere in the mid-teens and have really been sort of on a path downward since then. And so especially during the last decade, rates have been low. A lot of people have refinanced, and a lot of companies, individuals, a lot of folks have benefited from lower interest rates. But I think what we've seen now, of course, is unprecedented as far as low rates. The Fed is down to zero. Not that you're going to borrow money for
Right.
zero, but from a consumer perspective, it is still all related. And so what we were seeing early on as those rates fell was that mortgage rates were not dropping as quickly as rates were across other areas, including what the Fed was lending money to other banks, which was again almost zero, next to zero. So a part of that was because there was so much demand for mortgage debt to refinance, because you would think, wow, rates have got to be super low, but mortgage loans or mortgage rates really weren't coming down as fast as all other rates were coming down. I think that's kind of stabilized a bit, and some of that demand for loans has maybe been worked off. But definitely, yeah. I mean, you can really you can go to websites out there and kind of see locally who has the best rates, and even nowadays, it's quite easy to deal with. Online lenders can have really good rates as well, not just for savings accounts, but also for mortgages as well. So for sure, you really just at the end of the day have to shop around, see what rates do look like compared to not only what they've been in the past, but for whatever amount of money you need. If you're looking for, whatever type of loan you're looking for, whether it be fixed or variable, whatever duration, but definitely something to look into. But at the end of the day, just continue. You always do have to know your prices, know your rates, know the features, read carefully the fine print. Just make sure you're fully informed and you do your due diligence ahead of time Whether interest rates happen to be high or happen to be low, those things always remain the same. So definitely always do the research to make sure you're getting the best deal.
So let's say my wife and I are discussing this idea of refinancing our home. Is that a question we could bring you at Cardinal Financial? Would you be able to help us go through that and help us make a decision there? Or?
Sure. So the reality is a lot of financial advisors primarily work on the investment side. So when you look back historically, back to the 80s and even the 90s, a lot of the industry, the financial industry, was kind of geared towards helping people pick stocks, right? And so what we've seen over the last decade in particular is more and more financial advice being personal financial advice, and it's being more geared towards planning. So the financial planning space, and I happen to be a certified financial planner, it's an organization that has standards for helping people get their finances in order from a holistic perspective.
Right.
And so not just looking at the investment piece, but looking at all the areas. So when it comes to things like looking at mortgages or college planning, college savings, retirement planning, all of the different aspects of your financial life. So I think folks will find more of that available nowadays than they have in the past, when historically the whole financial industry was kind of geared towards just picking stocks or investments with people that, frankly, certain brokers, I guess at the time, wouldn't even have a conversation with you if you didn't have a certain amount of money. And so what we've seen with the advent, certainly, of discount brokers and fees coming down across the board, is that financial advice and access to financial products and resources has been democratized, and that's a really good thing for everyone.
I wonder what caused that shift. Is there something in the industry that changed? Like, how could it become more personal? Which seems nice to me, but I could see where before it was a little more standoffish and let's strictly look at your assets. But you're saying you can help a person figure out a personal financial plan for them and their specific family.
Well, part of it is competition. I guess they're really, competition came in and pushed down costs of everything. And certainly over time, we see prices come down of all products and services. And so that certainly happened in the financial industry, I think, overall. But I think from a planning perspective, there was a realization from a consumer perspective that, hey, people need more advice than just, should I buy X or Y stock or whatnot. And what we've really found through research and academic and practitioner research is that we found that those decisions about individual stocks are not really as relevant as they used to have been, in large part because index funds have become more accessible, lower cost, and it's been shown through research that low-cost passive investing is maybe a more consistent way for folks, especially folks that have smaller balances, to be a participant in the market and to get those gains over the long term without having to get involved with individual stock picking decisions. So, and certainly that kind of dovetails into overall financial advice. Folks need input on those important topics,
Sure.
And not just the investment side. So that's been an area that we've seen a lot of growth in this profession, and I think that's great for consumers overall to have access to that level of care if they need it.
Yeah, judgment free, like you were saying.
Yes,
no
yes.
Judgment zone. So we can
That's
come
right.
to you
That's
and
right.
lay it all out, and you can tell us
That's right.
what we've been doing right and wrong.
That's right.
Any other questions there? All right. Well, I thought that was a very good conversation. I enjoyed hearing about it. I think we're in unprecedented times, and it's nice to know that we have people here who can come and talk to us and give us solid financial advice, because I think everybody is on edge right now and worrying about these things. And I think the presentation that you have on Facebook that we provided, I think gives a lot of really good information, and we appreciate you offering that, and appreciate you coming here and telling us a bit about what you do, and just, I like the idea of financially fit. How can we get through this pandemic and be more financially fit? I think that's really important.
Awesome. Yeah. And this is, you know, a great opportunity to say, hey, check out the resources of the library in general, right?
Absolutely.
Fantastic
We have
resources
great
here
books here, for sure.
for all kinds of topics. You know, and the library does an awesome job of, you know, we're talking about democratizing, you know, access. I mean, the library, that's really what the library's mission is all about. Certainly, I've done other presentations here from a financial perspective, but you have folks coming in doing presentations on a wide range of topics. So everyone here in the county, you know, should definitely know and just be reminded it's a great opportunity to get free knowledge here at the local library. So
Trevor, you may be a librarian. I think you're a librarian in spirit. He sold the library.
Yes, I'm a big fan of libraries. I have a lot of family librarians and librarians in my family, and it's a really it's always been a special place for me growing up. Seeing my daughter now, who's 6, starting to read, and it's exciting just to live in a county here where we do have such resources here that are close to everyone, and no matter what community you live in here in Chesterfield, you have great access and great resources. So I'm glad to be a resident.
Couldn't say it better. Thank you very much, Trevor. Please check out library.chesterfield.gov for our upcoming events and stay in touch with the library. We appreciate you coming today and hope to see you again in future programs. Excellent work, Trevor. It's good. Librarian, I like